Alright, so the everything crash is here, and you know it's getting bad when my friends start texting me out of the blue why their investments are doing so bad. And everything is down. The stock market is down. The fear and greed index is at an all-time low. Bond yields are down. Crypto is more than down. It's underground, with Bitcoin hitting below $30,000 for the first time in a long time. So in today's video, I want to help explain what the heck is going on in the markets, because it is this kind of market that's going to turn investors into traders. This is what we've been preparing for, watching all these YouTube videos telling us to dollar cost average and stay the course. This is the kind of market that's gonna test your will to not lose money. And it's a reminder that sometimes it's times like these where there's not much any of us can do to run away, but just wait until the pain is over. And I'm right there with you, because all of my investments are down substantially. Let me just show you. So far this year, I am down close to 16%, and I've lost close to $100,000 worth on paper, mostly thanks to Coinbase. And I'm not even exaggerating, I am down close to 86% on this one stock alone. Imagine investing $70,000 of your hard-earned money into something and then watching it magically wither away into less than $10,000. You'd probably cry. Be right back. Now, the lesson I learned from this one stock is not to chase the hot, new, and exciting thing in IPOs. Even though I believe that Coinbase will come back and it's a great company, I just wish it didn't take me $70,000 to learn that lesson, but it did, so here we are. Now let me show you my crypto portfolio, which is so much worse. Here it is. This number used to say $1.2 million, so I'm down over 100% on my crypto portfolio. The only thing that's not down is real estate, and that's only because real estate moves really slow, but the pain is coming there as well. So that's what's going on, and I know I seem way too happy considering the circumstances, but the reason that I don't let this affect how I feel and how I invest is because I try to understand why this is happening. Now, I can't sit here and tell you what's gonna happen next because I can't predict the future, but I can show you historical data that shows what happens in times like these. Because the more we understand why this is happening, the easier it is to continue investing and staying the course. So let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the crash. So here's the explain it like I'm 5 version of what happened this week. This story started 2 years ago, so let's rewind. We got a global pandemic, people were let go, and we were given the elixir of revival to boost the economy. We dropped interest rates to 0, and we began a 2-year-long party where we partied a little bit too hard. Speculative tech stocks started to go into crazy valuations. Companies that weren't even making money yet had crazy stock values. NFTs that were extremely speculative were sold by the dozen. People were spending over $1 million on pictures of a pet rock. Real estate went to over $400,000 for the average home, and crypto went to the moon. And now that we realize that this party can't go on forever, the buzz is starting to wear off, and now we're seeing who partied a little bit too hard. And that's the explain it like I'm 5 version of how we got here. Now let me give you a little bit more of a technical breakdown of what triggered this week to actually happen. One of the reasons is because we got CPI data, the Consumer Price Index, which is the thing we use to measure inflation, and economists predicted that we would have 8.1% inflation, but we got 8.3% instead. It was rent, food, new car prices, and airline tickets that contributed the most to inflation. Now, whenever this kind of thing happens and inflation data comes out, there's 2 ways to interpret that. There's the glass half full and the glass half empty way of looking at the data. Some people look at 8.3 and say, this is good, because last month the reading was 8.5, so we've hit an inflection point. 8.5 was the highest, and now we're finally starting to come down. The worst of inflation is behind us, this is good. The glass half empty approach looks at the data and says, wait a minute, 8.3% is still ridiculously high. We want inflation to be anywhere between 2 to 3% on average per year, not 8.3%. In fact, if we look at the popular core inflation metric, which takes out food and gas prices, we were 0.3% for March and 0.6% in April, double that. So there's actually no guarantee that we've seen the worst of inflation. It could still very well get worse. So we could look at that and say that's one of the reasons why the market is going down, because when we get high inflation data, it reinforces Papa Powell to step in and increase our interest rates, which cools the economy down. So that's one of the technical reasons why stonks were selling off. Here's what happened to crypto. Bitcoin is falling and the fear and greed index is pretty much broken. So if you're new to crypto, welcome to crypto, where nothing is ever stressful, and he is only 25 years old. Now is one of the best times to get started. And if you're a veteran in crypto, you know that the best time to buy Bitcoin is when everyone is scared. And that's why I'm so excited to tell you about today's sponsor, iTrustCapital. iTrustCapital allows you to buy Bitcoin inside of your retirement account where it can grow 100% tax-free. iTrustCapital has over $5 billion in transactions. They've raised over $125 million at a $1.3 billion valuation, and they have over 150,000 accounts. Once you download the platform, you can buy up to 26 different assets and not pay any capital gains taxes on them, which is why some people use this as a trading platform, even though it's not meant for that, because trades that are done inside of a retirement account are not considered taxable events. But if you want to be more passive about it, you can also do what are called conditional transactions, where you could set the price of an asset and buy it whatever price you're comfortable with. They also just recently lowered their minimums to get started, which is now $1,000 to open an account. They charge a 1% transaction fee, and if you use my link down below, you will get a $100 bonus funding credit. There's 3 different ways to fund your account. You can do a cash transfer via ACH or wire transfer. You could roll over a previous 401k employer-sponsored plan, or you could transfer a current one either partially or fully with no limit, totally up to you. The contribution limit, of course, still applies. $6,000 if you're under the age of 50, $7,000 a year if you're over the age of 50, and $61,000 a year if you're self-employed and you have a SEP IRA. Anyway, they're awesome. I'm so sorry for talking about them for so long. I'm just so excited that you can finally put Bitcoin inside of a retirement account to let it grow 100% tax-free. So go check them out, and don't forget to grab your $100 funding bonus when you do, using the link down below. Now let's get back to it. One of the reasons why crypto crashed is partially thanks to a project called Terra Luna, which is a stablecoin project whose value was pegged to Bitcoin, and Terra was always supposed to be worth $1. It's pegged 1 for 1. And one of the reasons and one of the ways it keeps its dollar status is by relying on another crypto called Luna. And the promise is that you should always be able to exchange $1 worth of Terra for $1 worth of Luna and vice versa. So Luna was used as a price shock absorber to keep the volatility stable for Terra at $1. Here's an example of how this could work. If Terra ever drops below $1, you could spend $1 to get $1 worth of Terra to convert immediately into Luna and get more than $1 worth of Luna for instant profit. And the reverse is true. If Terra goes above $1, you could buy $1 worth of Luna and convert it into Terra and get more than $1 worth of Terra for instant profit. So it used both of these currencies to keep each other stable. And this system actually works as long as people have faith in the system. But if they don't and they start to sell both, you get what's called the dreaded death spiral. This is where the value of both coins goes down because each of them has a negative selling pressure on the other, and they both erode each other's values into nothingness, and people stop doing this arbitrage technique because they don't trust the system and they don't want to lose more money. Now, there's an amazing analysis by On-Chain Wizard which describes exactly what happened, but it turns out there was an attacker. And the attacker spent $350 million worth of UST to drain the liquidity pool and make people panic. That's when trades were frozen. And it was at that point the attacker spent another $650 million to offload all that money on Binance, and people really started to panic because it de-pegged the value from the dollar all the way down. And it was at that point that Bitcoin needed to be sold off to maintain the value of that dollar and to keep the system stable. So that's partially one of the reasons how Bitcoin went from 42K down to 31K, because Bitcoin was used as collateral to keep the whole system stable. It's pretty crazy what ended up happening, but that's not even the craziest part. If the attacker covers their short position and buys Bitcoin back at 32K, they could profit something like $800 million from this attack. So even though Bitcoin wasn't directly attacked, it was indirectly affected because this system relied on Bitcoin to keep it functioning. And that's how this utopian dream that is DeFi, which is the promise that we could run the financial system in a decentralized way, was attacked. And when people's faiths are shaken, they sell out, they get scared, and the value goes down. So that's what happened. Now let me share with you some more market data that shows that this market could get a lot worse from here. There's two main things I want you to remember after this video. There's something called QE, which is quantitative easing. This is the infinite money glitch. This is where the money printer go, and then there's QT, which is quantitative tightening, which is where the money printer go and it sucks up all the money. Now, whenever the stock market falls, investors like to look at Papa Powell for help, and they hope that he could lower interest rates to stimulate the market again. But ever since the 2008 financial crisis, we've actually had 4 periods of QE, quantitative easing. And every time we did that, we experienced the largest average monthly returns in the S&P 500 during those accommodative times when Papa Powell was nice. In other words, the market loves when he's helping and it hates when he's not. If you look at all the times we've had quantitative easing, you'll see the stock market is always positive. When we have periods of quantitative tightening, like the 3-month period from October to December 2018, we lost almost 14% in a short 3-month period. So come June 1st, Papa Powell has told us that's going to be the start of the QT period, quantitative tightening, when the Fed will start to unload its portfolio of assets, and that's when the market's not going to like that. And based on this historical data, the market will probably go down even more, so just expect the worst and be prepared for it. This is not the end of it. That's also why in the Fed Watch Tool website, it's backing us up, because this year we will have 5 more Fed meetings where the Fed will increase our rates anywhere between 1/4 to 0.5%, which they've already done at the beginning of this month. They raised it by 0.5%, which was the biggest increase in the last 22 years. Once again, the market does not like that, and it goes down. So that's June 1st, so just be prepared. That's what's going on, and now let me leave you with some words of encouragement, and I hope these help. According to a Bank of America study, if you were to put in $10,000 in the 1930s, it's estimated that by today you would not be alive. So everything is about perspective. Just be grateful. Just kidding, that's not what I was gonna say. It's estimated that today you would have over $1.78 million, which is 17.7,000% return. It's just insane. But if you were to miss the market's 10 best days for every decade, today you would only have $12,800 after almost a century worth of investing. Now, here's what's crazier. According to a study by JP Morgan, 6 of the market's 10 best days come within 2 weeks of the market's 10 worst days. So now more than ever, the data suggests we should stay invested in the markets, because missing even just a small amount of time could give us really, really bad results. Now, as for crypto, some people have suggested to look at the yearly lows instead of the yearly highs for perspective. For example, in 2019, Bitcoin's low was closer to $3,400. In 2020, it was closer to $5,000. In 2021, it was $28,000. So 2022 could be a lot lower. It could be 15,000. But even if that's the case, Bitcoin's run has been incredible, and it will continue growing at an insane pace. But this is a reminder that it won't always do that. And that's fine, because times like these, which hurt, which are not fun, are a necessary part in keeping the economy healthy. So use this time to master your own emotions, because if you can do that, you will beat most investors just by doing nothing except smashing the like button and watching my silly YouTube videos. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Go grab up to $250 worth of free Bitcoin with this link right here. Go check out I Trust Capital, grab your free stocks, links are down below, and then go track them automatically with a spreadsheet, link down below, and my Patreon. Love you, thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.